We rallied back up. I was saying how this could be a lower high and a retest of former um, support turn resistance. And the fact that we tagged the upper Bollinger Band, was an extended move, two standard deviations away from the mean. So that was kind of in the camp of, hey, we could be forming a lower high, and now we're seeing some selling pressure. Obviously, the candlestick today isn't complete. But if that was a lower high on Friday, then I do think it puts us back into the department where the longer term cycle in the dollar yen is culminating, and we could see an extensive washout lower into the remainder of the quarter. But that doesn't mean that we need to take a trade on right now. I think right now, some patience is advised, and I'm just going to stand aside. We do know that the dollar pulling back right now is a tailwind for the equity market, and we're seeing equities behave accordingly. In that regard, we're seeing the Nasdaq lead to the upside today, so that is a good sign as well. Because you do want to see Nasdaq and tech lead to the upside when you are in risk on mode, and that is what we're seeing right now. So those are all good indications for the bulls. Remember that I'm a little more bearish on the euro right now compared to the yen due to those cyclical factors that we've been discussing. And we also talked about a scenario where we could see the dollar index rising because, it's like 57% against the euro. Um, but the dollar pulling back against the yen because the dollar index is only about comprised about 13% of the dollar yen. So that's where I stand in currencies. I'm kind of neutral on dollar yen, as I would call it right now. I'm still more in the bearish camp for the euro against the dollar. This could be a temporary low where we could see, a 1 to 2 week corrective rally followed by the formation of another lower high. But I do maintain my general thesis that at some point this year we will see stocks rally in conjunction with bonds. Um, and with the dollar. And that's usually what you see when you get into the late stages of various market cycles is kind of like that global flight to safety trade into dollar denominated assets. Remember, the dollar still is the world reserve currency of the world, doesn't look to be changing anytime soon, at least not until another serious competing nation can create a bond market as deep and liquid as ours. So that's where I stand on that. If you look at the short term trend here in the euro, you could certainly make an argument that we just completed another higher low. But if we rally back up here to complete another lower high, we could then say that we have two meaningful. You would say that we have another meaningful lower high after the one that we just printed at the end of last year compared to the July 2023 highs. So again, you zoom out here, the euro is definitely in a bear market against the dollar. It's just a question to me as to the cycles, and I have different cycle measurements in the euro compared to the yen. So right now, no positions in currencies. Um, we're still kind of in this rectangle formation on the hourly time scale. These generally resolve as continuation patterns, and so I do again have a downside bias in the dollar against the euro, meaning that I expect the euro to depreciate against the dollar to rise against the euro. And as we look at that through the lens of euro yen, I think that um, we are also seeing our thesis pan out here because we are seeing the euro sell off against the yen today.